There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Bravura Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Wednesday afternoon. I'm Juliette Sarley. Great to have your company. Looking like we are going to finish pretty flatline on the local market as we continue to monitor what is occurring in the United States. US equity index futures edging lower. The government in Washington only hours away from a potential shutdown. Investors, of course, focused on President Trump. He's threatened to oust federal workers and cut programs. There are also fears that this shutdown could delay key economic reports used to gauge the Fed's path on interest rate cuts, of course, the non-farm payrolls in particular. So a day, of course, where it has been shutdown jitters very much weighing into the overall market. We've also been seeing lithium stocks absolutely dumped today. So a big lithium lull coming through. This is on these reports that Chinese authorities have approved reserve reports from two major lithium producers operating in the mining hub of Yichun. And of course, all this uncertainty, what does it mean? It means, again, we are piling into gold. Gold once again touching records, golden gains coming through. Let's have a look at some of the sectors in the day's trade as we round out the session. And of course, those lithium players coming under significant pressure. PLS down almost 6%, MinRes down more than 3%. Liontown is there down by around 10% as well. Gold is where you are seeing some upside, although Evolution and Newmont are giving back a little today. Ramelius and Genesis Minerals looking pretty good. West Gold, I should point out as well, announcing plans to increase its gold production. Here are where some of the other miners sit, and of course BHP very much in focus, which we'll get to in a moment, but shares down by 2.6%. Rio Tinto, Fortescue, South 32 all heading the right way. When it comes to BHP, though, shares very much in focus. On reports, China has temporarily banned purchases of its Pilbara iron ore. No confirmation yet from the mining giant. Shares in New York down something like 5%, and they fell in London too. Drone Shield, though, have a look at that, 23%, $5.68 now. This has now up more than 30% for the week, so investors continuing to pile into the counter-drone technology specialist amid these recent contract wins and discussions on the EU's drone wall initiative to really counter some of these Russian drone threats along the eastern borders. Southern Cross Media still continuing to monitor that. It is lower, the board though saying it's confident it could thwart an attempt to change its constitution to prevent it issuing more than 25% of shares without shareholder approval. Worth noting, Sandown Capital, which owns more than 11% of Southern Cross, has sent the board a request to amend the company's constitution, prompted by the media company announcing it will issue almost 100% of its shares in this takeover of 7 West Media. And Bravura rocketing higher after upgrading its earnings guidance for full year 26. Let's get into now our guest comments. Mark Gardner from MPC Markets joins me. Good to see you, Mark. We are anxiously awaiting potential shutdown here in the US.
Not awaiting, it's shut down.
Yeah.
It's 2 in the morning over there now, so it's officially in shutdown. But look, it was largely expected. Best indicators at Poly Markets, which has been above 80% for most of the week. And, you know, it was largely towards, watching US media this morning when I was doing the morning report. It was basically a foregone conclusion at that stage. But, interestingly, we've had, I think, 15 shutdowns since, since 1981. But if you have a look at the averages here, in the period of the shutdown, generally, we're 55% of the time we actually end up higher. And then on a 12-month basis, 87% of the time we end up about 12% higher. So, and the last shutdown was the longest at 34 days, but they only really average around 8, median around 4. So these things tend to be resolved fairly quickly. I think it's been a bit of it's been quite good for the healthcare sector, because I think what it does in the US is Trump's been really attacking the healthcare sector and big pharma, etc. And that sector, even if you look at the ETFs, it's probably one of the worst years in the healthcare sector you've seen for well over a decade, I would have thought. And essentially it sort of forms a bit of a line in the sand. I think the Democrats are saying, we'll make some concessions, but you've gone too far now. And we saw last night that sector was up about 2.5%. So I think there's probably some really good buying opportunities. I think you've seen today, despite the fact we've had, it's been a negative day, the likes of CSL, TLX, Clarity, and the healthcare ETFs are all up around about the 2 or 3% mark. And as everyone has said, it's market consensus that they are quite cheap, but to be rising in a falling market where there is nerves, I think that probably, it's tentatively, I would say that forms a little bit of a base in that sector. And if we are going to go into a period of uncertainty, to get defensive stocks at this super low valuation is probably a really good opportunity. So we rotated out of some of our, we were really, really overweight gold, silver, platinum, and gold miners. So we actually took some off the table yesterday, because I think if this is resolved in 3 or 4 days, I think you'll see the likes of gold and silver head back a little bit lower. It's been quite an incredible run. I think silver and platinum are up 45% in 4 months. So it's one of the bigger moves.
So just to clarify what I meant, they're anxiously awaiting what this is actually going to do to markets, I guess, in terms of where we see potentially the dollar on the back foot as well. So quite a lot of uncertainty ahead for traders. Yeah,
it's more so the economy rather than the stock market, as indicated in those stats. So I was genuinely surprised when I went through and backtested and did all those stats this morning. That the market reaction was generally, even over the course of the shutdown, was generally mildly positive. But I mean, we've got the added effect of, we are sitting at record high valuations, highest concentration of the top 10 stocks in history and things. So there are some fringe issues going on. I think Taiwan's pushed back on manufacturing chips in the US. And obviously, those defence stocks are doing extraordinarily well. And I think Drone Shield's about 4.3 billion market cap now. So the likes of EOS, which is quite widely regarded as possibly superior technology in that space, only around the 2 billion market cap mark. So I think that probably the opportunity, or the best risk reward opportunity there, is probably EOS as it stands. And that drone warfare, realistically, I mean, Putin sent, or Russia sent 600 drones on a couple of occasions in the last 2 weeks into Polish and Ukraine airspace. So they do need that drone defence, because they keep firing multi-million-dollar missiles at them, and the drones only cost, 50-odd thousand each. So you're going to go broke pretty quickly trying to take out drones with big missiles.
All right, so if you're trimming a bit from gold, from silver, we had Jonathan on earlier on the trade as well, where are you maybe putting that money into? Into
healthcare at the moment. We see pretty good opportunities for a downtrodden market, and it, as I say, sort of particularly plays into, we are at record highs, and getting those defensive stocks are generally, they're very ignored when we're at record highs. Everyone's going for those big growth companies, but defence stocks as well. But we've had those on for quite some time, and we've been mainly European-based stocks there. So the Defend ETF's a pretty good one. It's got high concentration of European stocks and DTech as well. So they're pretty safe. They're pretty good safe havens. But yeah, and as I said, we only trimmed our exposure to precious metals, because I think that US dollar, they still haven't gone anywhere near solving this debt problem. And I think the last shutdown wiped about 12 billion off the US economy. We're not going to get payrolls numbers now on Friday night. So yeah, we could be a little bit jittery, but it's generally worse for the economy than it is for the actual stock market.
I wonder if there'll be an 11th hour reprieve and we will get that jobs report, but remains to be seen potentially.
Yeah, well, that's right. I mean, they basically said that if it does shut down, they won't. there was talk of 100,000 government employees tendering their resignation if the government shut down. So that'll please Trump more than anything else. And I believe he's got his EJ Antoni's now running the Bureau of Numbers and Statistics. So softer numbers actually suit Trump because he really wants rates down. It'll be an interesting few days overall. But I think if this had happened under Biden or Obama, this would be much more of a freak out. But we have a crisis every second day with Trump. So realistically, this is it's a bit of a drop in the ocean. I mean, I think everyone's a little bit news weary, and that could catch people off guard eventually. But I think that, from Liberation Day to re-announcing a bunch of new tariffs this week as well, this market's pretty bulletproof. I've never seen an equities market hold in there in the face of such adversity in my career, and I started in the mid-90s, and there's been a fair few black swan events in that period.
Indeed. All right, and just quickly on rates, your thoughts on the RBA, whether or not we might be done with the cutting cycle?
I don't think we're necessarily done. I think they're just cautious on inflation, which is what they said, as is Powell and most central banks, because that's their mandate. They're in the unfortunate position that they have to say the unpopular things, and then the journalists and the governments get to say the popular things and criticise them. But they are doing their job. Look, if we do get a little bit of weakness in the labour market and a slight slowing in the economy, that will largely help take care of inflation, I would say. So, but if we keep spending money and we keep buying houses at new record highs, it makes the RBA's job really difficult. So, and a lot of those inflation numbers, they're like real inflation to me. Cost of living crisis is pretty real for people in terms of rents and things, and I think the deflationary parts of that number, like electronics, etc., are not really very realistic. So, I think if they get some softness in those CPI numbers, particularly the quarterlies and the trim mean, I think they're back on the table again. So I think one and done is very, very rare. So I think we'll get at least one or two more, but I think it'll be on a softening economy.
All right, Mark, we'll leave it there. Thank you, as always, Mark Gardner from MPC Markets. And just on that, of course, today is October 1, and so the first home buyer scheme came through, this new scheme, and already we're seeing, according to the AFR, unprecedented demand. So that is likely, to Mark's point, of course, continue to probably drive prices for homes higher. Getting back to the equity market though, the stock of the day was Bravura. Nadine spoke to our experts, Andrew Weiland from DP Wealth Advisory, Henry Jennings from Marcus today.
I would imagine that we're going to see some upgrades here because this was a little bit of a surprise coming out of the blocks for this one. So, and the fact that we've got a new CEO, which gives it some certainty. We've got an upgrade to guidance, so I wouldn't be surprised to see this one push further ahead. It has been one of the ugly ducklings in the sector to some extent. It has been a bit unlike Netwealth and Hub24, but that focus on the UK, I think, is pretty good. And the fact that the CEO is going to be living in the UK as well obviously helps.
It's pretty unusual for a new management team or soon to be new management team guiding upwards so early. Normally they're dampening expectations. So I think it's a buy. Probably the only amber light that I'd have, Nadine, is I note that short interest is rising, which is potentially one of the reasons why the share price is popping today, that people are covering their shorts, in other words, trying to protect themselves from it going ahead further. But on balance, 60% of their earnings is recurring, the UK business, pound, etc., so it's a buy.
All right, pretty flat finish as we look to what the US government shutdown is going to do for US equities. But of course, here were some of the winners, including DroneShield that we have spoken about. An incredible run. Amidst all the geopolitical concerns, investors continuing to pile into this stock. Of course, Westgold as well came through with a production update. Austal, A2 Milk, Dyno Nobel also doing well. To the downside though, today it was all of these lithium players that we touched on at the start of the show. Liontown Resources down almost 10%, PLS off by about 6%. block in there too, and then we had some more minerals players along the likes of Boss Energy and MinRes. Small cap players today, Nova Minerals up by some 31%. Elsight also had a good day, up 31.5%. Some of the laggards in the small end of town included the likes of further lithium players like Atlantic, which was off by 11.4%. All right, well tonight, of course, I don't think any of this data is going to come out during a government shutdown. We were expecting construction spending, ADP private payrolls and the ISM manufacturing index, but of course we will wait to see what occurs. Meanwhile, tomorrow, the goods trade balance for August, a $5 billion surplus expected versus $7.3 billion in July. Also, the household spending indicator for August could lift by 0.3%, according to CBA, and then we get the RBA's financial stability review. Final check on where the local market finished, pretty unchanged there. So we are, of course, monitoring the impact of this government shutdown. You can see when the sell-off occurred when we got that news, and then we saw a bit of buying going through into the close, particularly and notably in healthcare, which Mark said he's trimming gold and silver into that space. Certainly weakness coming through from the mining players, weighing on the materials sector, those lithium players, and energy also weaker. Utilities looked pretty good, up by 0.7%. Well, we'll see what Wall Street action brings tonight on the government shutdown. We'll bring it all to you from 9:45 a.m. Eastern tomorrow.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.